Johny Lambridis, Element Investment Managers from our Cape Town studio. Johnny, thank you very much for joining us this afternoon. Naspers is one of the key stories that we've been following for the past 2 days. Extreme volatility we're seeing in the share price of late. Yesterday, the stock closing down 5 2/3%, and today, one of only 4 stocks in the top 40 to close in positive territory, up 0.75%. I've been collating views on the Naspers story, and let's start with those who are relatively negative on Naspers at the moment.
So you become more and more nervous about what is that underlying revenue stream. Obviously, this news is on top of that. But even if you take away the current news, you realize that they're on a kind of a treadmill of having to develop the next latest game to put online. And at some point, you can miss a beat in that treadmill, and then suddenly the revenues aren't there. And that type of market is, in essence, a fairly fragile market. So the growth they've seen over years has been phenomenal. That's what's driven up Naspers' share price. But when you look at it now, you're kind of less optimistic about it. So our feeling has been to kind of, unfortunately, withdraw from the market a bit.
Is it value on a 3-year basis at this price? The answer probably is yes. Okay. The answer probably is yes. Is it going to fall short? Is it going to fall more in the short term? The answer is also yes. I mean, if you just take what MTN did in his interconnect fees, I mean, it fell to below 100. And now it's back at what, 113?
113.
Yeah. So, it's recovered from that. I think Naspers could do something very similar. It could easily fall another 30, 40 rand before we see any sort of rally.
So a better opportunity perhaps down the line.
I would think so. And this whole, it's not to me entirely sure what the problem is. It's to do with this QQ currency, but it seems more to do with China doesn't want foreigners owning such a big share in one of their online shopping, online payment schemes. There's a lot more to it than just stopping children cashing in their QQ currencies for for the bubble gum at the shop sort of thing. So I don't quite understand what's happening, but I think the price is going down because the moment you get regulators involved, think about the Australian super tax. You get regulators involved with something, the share price goes down until there's absolute certainty.
I've been looking at the 10-cent share price. It's only back to where it was in October last year, although it's around 126. I think it hit about almost 170 and change. So it's had a huge come off from when it peaked earlier in the year. Where's it to 320 or 220? My gut, frankly, says 220. And unfortunately, because Naspers the stock I like, but the 10-cent wheels are not coming off, but they are wobbling. And time will tell how that wobble is going to pay out. But the problem with Naspers, I mean, a massively diverse company, and unfortunately its share price basically became 10 cent. And that's always a risk where too much gets focused into one underlying asset.
If you're exposed to Greater China, just remember that you're not invested in Rupert Murdoch here. You're invested in something where some Chinese bureaucrat can say no and turn your business model completely upside down. In fact, possibly even put you out of business. So that's a sort of capricious aspect to it. And my argument was that whatever it's trading at over there, discount it and discount it again.
Well, there we go. Johnny, we had Wayne McCurry, we had Kevin Lings, Simon Brown and Mark Ingham all net negative on Naspers in the short term. In fact, Simon Brown going all the way to say that 220 is a more realistic level in the short term, although he likes the stock. What do you feel?
Well, if we go back I think 6 weeks ago, you had me on the show, and QQ had just come out with their first quarter results, and Naspers was sort of trading 300, 310. At that point, our view was that the sort of tail was wagging the dog. Too much of the value of Naspers was tied to 10 cent, and 10 cent was on a very steep multiple at that point, 30 times. And when a stock's trading on such a steep multiple, it can't really absorb any bad news. And obviously, we've had some sort of very bad news coming out of China with respect to regulation of online gaming and the virtual currencies. And that's obviously sent the stock tumbling. It's obviously more attractive now, lost about 15 to 20% of its value, but it wouldn't be at a level where we would look to accumulate just yet.
Investec PLC 2.5% lower, close to the bottom of the top 40 today. Do you think that the banking levy in the UK, the 0.04% on liabilities, is the reason that we're seeing Investec trading lower?
Probably just from a sentiment point of view, but actually not from a financial or earnings point of view. Having briefly looked at the numbers, it looks like Investec might actually escape that tax. That tax only applies to banks over a certain size, and Investec might come in actually below that. And even if it applied to Investec, it would be quite small. sort of 1 to 2 maximum % of earnings. So it's probably more a sentiment point of view with respect to the tax, but obviously the UK will also, with all the austerity measures, perhaps not grow as fast as people expect, and maybe that weighed on Investec slightly.
Johnny, in your opinion, what's unfolding in the local market at the moment? It certainly appears we're being buffered by risk. One day it's risk on, the next day risk off, and everything moves in that direction.
Yeah, I mean, there's still quite a lot of volatility. So a couple of days we had the China depegging their currency, which sort of sent markets roaring. And then obviously the US home sales today. So still very much news related. Our view is that markets are still expensive, and therefore we still place a bit more emphasis on the negative news coming out. So things like US home sales concern us, whereas the Chinese depegging, in our view, was a bit of a non-event.
Do you expect further downside from that new home sales number out earlier, as I said, down 32.7% for the month of May?
We've always been a bit concerned about how strong the recovery is both in Euroland and the US once you start to remove government stimulus. So that would go to US home sales with the first time home buyer tax credit and all the cash for clunkers that we've seen. We've seen German car sales now begin to sort of roll over as well. So those are the numbers that we're focusing on. And generally what we're finding is that they are weaker than the market expects.